Hi viewers, welcome to the video series that we are going to see about one of the biggest top 10 billionaires. He is called as Warren Buffett. We are going to see about some important rules of investing about Warren Buffett. Okay, there are some 7 types of rules in a Warren Buffett. You can see the rule number 1, that don't hold a company for a 10 minutes unless you are willing to hold it for 10 years. What does it mean? It means like Warren Buffett, what he is telling, like don't do the gambling, focus on long-term investments, and don't have a gambling mindset, buying the stock now and tomorrow seeing the price and immediately and sell it off. Okay, don't focus it on the buying the company for a short term basis. Okay, focus on long term. It will improve your power of compounding. And you can see the power of compounding. You can put some calculator and you can see some videos on the power of compounding. It is called as an eighth universe, okay, of that is called as an power of compounding. And next is rule number 2, that's don't lose your money. You are not a place, the stock market is not a place to invest and lose the money. The people's plenty of peoples are coming to the market and investing the hell amount of money and losing the money in the options and future earn options. You can see the people's like if you open your window last year the SEBI has declared like in a 1 year in a option trading the plenty of peoples are losing the money, hell of money. Only the 4% of peoples are making the profit only in the option trading. This is the thing, like don't lose the money in a stock market. This was the rule number 2. And rule number 3, like buy the stock below the intrinsic value. What is the intrinsic value? Intrinsic value calculate on based on their cash flow statement and focus on price to earning ratio. Okay, you should not buy the stock which was trading about 150, 200, 300 price to the ratio. The price is more the fair value. Okay, the price of the particular stock is the highest higher. Example, in case if you want to buy a good company, example you take like a in India like a TCS or some Tata Group company. Example, that TCS was trading at around 3,500 rupees. During the Corona time, the stock was crashed to 1800, 1600 range. But if you see the intrinsic value, the fair value of the particular stock is very low. The PE was very low for the IT industry, but that was a good time to buy a good stock. So this stocks on the intrinsic value of the particular stock. And rule number 4 is like a stick to business what you understand. Okay, what you are understanding about the particular business, how it is going to perform in future. Example, I'll be telling like if you take on the banking industries going to perform now also and going to perform after the 50 years also and going to perform after 100 years also, because the transaction everything involved in the banking stocks. And if you take for a FMCG. FMCG is going to on consumer based index and it is going to perform now also the and future also it is going to perform. You once before buying the stock you want to focus on the business. This is the rule number 4. And rule number 5 is like buying the stock at a fair price. Buying the stock at a fair price means when the correction comes, that way you can see like the correction used to come every 4 years or 5 years, and even at 10 years also the correction comes. But buying a good stock at the fair price, example the correction came at 2008 during the dot-com bubble has crash has came, and 2020 also there is a crash, and 2022 there is a crash because of the inflation data. But buying a good companies at the fair price, this was the rule number 5. And rule number 6 is like a be greedy when others are fearful, and be fearful when others are greedy. This is the one thing everyone used to tell. That's a rule number 6. Okay, when everyone talking on the particular stock that will go down and the market will crash, all those things, that time you want to be a greedy. And whenever others are fear, you want to be when others are fearful, you want to be a good investor to be in the market. And rule number 7 is like see seize the golden opportunity. The golden opportunities comes when the market crashes. Example, like the people are telling now there is a going to happen a recession, all those things, but recession will not happen immediately. Okay, without knowing anyone, the market will crash suddenly. That use that opportunities to buy the particular stock at a correct time. This was the rule number 7. These are some important rule about the Warren Buffett strategy. Thanks for watching. Please subscribe. Bye. Thank you.